Welcome back to Smart Roots. In today's video, we'll be discussing about depreciation. We'd already started discussing about this in the previous video when we discussed about asset. If you haven't seen the previous video, I've provided the link in the description box below. Let's get started and find out what depreciation is. So in this video, we're going to discuss two important questions. What is depreciation and why depreciation is an important concept in the world of finance. So we will also be touching about the history and evolution of depreciation concept. Let's get started. So what is depreciation? So we studied and also identified the different categories of assets in the previous video, namely the fixed assets, the current assets, and also the intangible assets. So when we talk about depreciation, which category of asset do we associate this concept of depreciation? So current assets will include inventories and receivables that are encashed within a period of 12 months. So they are encashed within a very short span of time, and thus there is no need for a concept of depreciation. On the other hand, when we talk about intangibles, they have a similar concept as depreciation called as amortization, and we will talk about that in the future videos. So for now, we know that this depreciation can be associated with the tangible fixed assets category. So the depreciation as a concept is very important and associated with the concept of asset. So let's define depreciation. Depreciation is nothing but an allocation of the cost of asset over its useful life. So it's a method to allocate the cost of the asset throughout the useful life. It also represents how much of the asset's value has been used. So this is a very important definition of depreciation, because the whole purpose of charging depreciation is to show how much of the asset has been used in order to generate revenue for the company. So that's the whole purpose of introducing this concept of depreciation. But then we need to understand with the help of a numerical example to know why depreciation is important in the financial statement. So let's take an example where we purchase fixed assets worth $6,000 in the year 2020. And also we purchase office supplies worth $1,000 every year for 3 years. So when we extract the P&L for the company, you would notice that the fixed asset expense has been charged in the year 2020, which is the year in which we purchase the asset, and the other years are zero because we don't purchase the asset. Then we have office supplies of $1,000 each every year. So when we look at the net loss or profit for the 3 years, you would know that there is a huge loss reported by the company in 2020 when it actually purchased the fixed asset. Is it because the company has not been performing well? No, the company has been performing well because it's been earning a consistent revenue of 4,000, 5,000 and 6,000 respectively. So this net loss that is reported in the first year is because the company has expensed off the entire amount of $6,000 in the first year. But this fixed asset, say it purchases a vehicle or it purchases a property, it's not going to be used by the company only in the year of 2020. It will be used by the company in 21 to generate this revenue of 5,000. It will be used by the company in the year of 2022 to generate the revenue of 6,000. So while this fixed asset is used for 3 years, is it right that we show the entire cost of the fixed asset only in the year 2020? No, it's not right. So that's why I'm showing a better presentation where I distribute the cost of 6,000 across 3 years as 2,000, 2,000, 2,000. So by doing this, what happens to my profit and loss account? My profit is 1,000, 2,000 and 3,000. So it's a consistent profit that a company has earned across 3 years and corresponding revenue increase for the 3 years. So this gives a better picture about the company's performance as compared to when the P&L is being prepared in a way that the entire cost of the fixed asset is shown in the first year. So that's the need for allocating the cost of asset, and that's why the concept of depreciation comes into the picture when a fixed asset with a huge amount of cost is being purchased. So we also purchased office supplies of 1,000 every year, but it's not such a huge cost that it actually impacts the company's profit and loss account, and that is why even though it is a fixed asset, we do not apply the concept of depreciation to the office supplies or low value items. So we apply this concept of depreciation to fixed assets which are high value. So what is low value, what is high value will all be answered in the standard, and we will be discussing about standards relating to depreciation and asset in the next video. So for now, this is an example to illustrate why the concept of depreciation is important in the financial statement. So, what is the need for depreciation? So, based on the numerical example, we can understand that the need for depreciation is to show that the asset is contributing to the entity's revenue for more than one accounting period. So, it would be inappropriate to charge the cost of the asset to one single accounting period. And also, following the concept of accrual and also following the concept of matching, it is appropriate to show the cost of asset across the years in which company uses it to generate the revenue. So thus there was a need to identify a method to allocate the cost of asset, and that method of allocating is depreciation. So when we look back at the definition of depreciation, it's the allocation of the cost of asset over its useful life. But what is useful life? This useful life is generally estimated by the management depending upon the expected physical wear and tear and also legal limits based on which the company can use the asset and also based on previous experience on using the asset. So based on this, the useful life of the asset is estimated by the management. In the numerical example, I've just assumed that the fixed asset is used for a period of 3 years. So I spread the cost of asset across 3 years. So whether it's 3 years or 5 years is estimated by management based on its experience. So again, when we go back to the definition, its depreciation is the allocation of the amount or cost of the asset. So in the example that we looked, we actually allocated 6,000 across 3 years and then we put a constant charge of 2,000 every year. But is this the only method wherein we can charge depreciation? This is one of the method, also called as the straight line method. However, the standard, the IASB, which provides the IFRS standards, provides other two methods. The other method is diminishing value method, where there is a decreasing charge over the useful life, and also the units of production method, which is based on the output. So if the company is producing 12,000 units in the first year, 7,000, 4,000, 5,000 in the consecutive years, then more depreciation will be charged based on the number of units it actually produced in the first year. So these are all the different methods in which depreciation can be charged. So far in this video, we have understood what is depreciation, what is the need for depreciation, what is useful life of of the asset in order to charge depreciation, and also what are all the different methods in which depreciation can be charged. So these are all the theoretical part of depreciation. But then we need to understand the next most important question: why depreciation as a concept started coming in the world of finance. So when we discussed about the history of double entry system of bookkeeping, we talked about the ledger and journals, which were fairly simple and straightforward. But however, the need for depreciation started creeping in after the 16th century. Why? This was because before the 16th century, most of the businesses and operations, they were more focused on agriculture and horticulture, so which was a labor intensive industry, and there was no need for huge machineries or equipments. So the need for depreciation was felt less. And also, when we talk about those industries, they were owner owned. What does this mean? Because the number of investors or people who were actually investing without actually working for the company were less. It was actually the owners who were directly involved in the operations of the companies. So because of this, the activities were more transparent, and also the income presentation was also very easier, and it can be done very easily because it was fairly simple and straightforward. So because of this, the need for depreciation was not felt. However, with the Industrial Revolution and also the introduction of railways, the business activities became larger and complex, needing more sophisticated financial information systems. And also, the Industrial Revolution brought into a use a large amount of equipment, resulting in more capital intensive industry with a greater depreciation potential. So the industrial revolution, which made the industries more capital intensive, slowly brought in the need for having something called depreciation, because it was not appropriate to show in a profit and loss account where a huge chunk of money is actually expensed off in 1 year, whereas in all the other years the company has been performing well. So all these capital intensive industries and the industrial revolution started the need and for depreciation, and acknowledging it to be very, very important in correctly and accurately showing the performance of the company. And also with the increase in the publicly owned companies, there were more investors who were interested in how the company is being performing, and also they were interested in knowing about the net profits of the company, because the dividends were again based on the net profits of the company. So the increase in publicly owned companies and also increasing importance of accounting as a profession increased the importance of having the concept of depreciation. Depreciation had a long history of controversies, because it's ideally a non-cash expenditure, because it's an expenditure for a big amount of money that is already expensed off in some of the previous years. So that's why there were a lot of controversies in actually providing for depreciation, because depreciation, unlike other expenses, is not a cash expenditure, it is a non-cash expenditure. So in spite of all these controversies, the need for depreciation increased, and it is very important because it is needed for accurately presenting the profits, and also in following the accounting principles of accrual and matching. So that's why depreciation improved and increased as an important concept in the area of finance. So depreciation became a depreciation policy in the year of 1960s, and also it was moved to the generally accepted accounting principles. So depreciation had evolved and became a very important concept in the world of finance. So this is what depreciation is. We have discussed quite a lot of concepts about depreciation. We started with defining what depreciation is associated with. Then we identified with a numerical example why there is a need for depreciation in ascertaining the performance and profits of the company. We defined depreciation and identified what a useful life is, and how this depreciation should be done for any fixed asset, what method should be used. We also try to understand how depreciation evolved in our history, where it actually started, and then we also understood how depreciation became so important that it eventually moved to the generally accepted accounting principles, and it became very important part of the company's financials. So we will discuss more about depreciation and also the different methods of valuing the asset and so on in the next video, where we discuss about the IFRS standard that revolves around these two concepts. So this is to give you a very broad overview about what depreciation is and also what asset is, so that it's easier when we try to explain the standard that revolves around these two concepts. So thank you for watching the video, and if you have any doubts or clarifications or feedbacks, please feel free to comment in the comment box below. Thank you so much.